we mentioned the falling prices, and you do have a prediction for what we may see by New Year's Day, right?
Yeah, I think we could see the national average fall to its lowest that we've seen under President Trump. That would have to drop another 6 cents a gallon to $2.22. Crude oil prices remain relatively low, still a lot of headwinds. API yesterday posted a big jump in crude oil inventories, up close to 7 million barrels. Of course, we're about 33 minutes away from seeing what the EIA says, but if you see a big increase in crude oil inventories from EIA, I would expect that the rise in WTI to revert to a negative.
Do you think on the retail front is the bigger risk on the upside or downside, say for the next 2 to 3 months?
I would say there's probably a risk of moving further down, but then closer to the end of that 2 to 3 month window, I think prices will start their seasonal trend higher. So I think gasoline is kind of stuck in this pit of despair for the next month or two. Demand is relatively soft, and with refineries producing a lot of gasoline to get at that more valuable distillate, gasoline is kind of the unwanted portion of the barrel. Prices are going to remain challenged. So I think there's still possibility that we see the national average go lower before rebounding as it normally does in the spring.
Yeah, that's an interesting factor, Patrick. You mentioned that refiners have not really curtailed the production of gasoline because they want to sell the more valuable products. At some price, does there get to be a little more of a response in terms of lower production? On the other hand, does this also make gasoline kind of a weather play at this point?
Well, it does. Especially for refineries that aren't well positioned to export gasoline, values are very low in some areas of the Rockies and the Great Lakes. In fact, in Michigan, of all places, some gas prices are down to $1.69 a gallon, reflecting some of the deeper discounts that refineries are forced to offer in those areas where gasoline is essentially landlocked. And refineries, of course, don't want to produce more of it, but they're still getting at the valuable distillates. Crack spreads for gasoline remain acceptable in most of the country, but you're going to see a lot of overhang, I think, before we transition to that summer gasoline. So I think some of the values in the Rockies and Great Lakes in terms of retail gas prices are probably going to see even lower prices as refineries have to move that gasoline off the market before they, as we progress to spring.
Right. And finally, does the onset of new pipeline capacity do anything to change seasonality going into the spring?
I think, there's a lot of problems right now, as you mentioned, with bottlenecks. And a lot of it is crude oil, some of it is products. But I really don't see any quick resolve there in terms of pipeline capacity doing a whole lot to alter the future of prices. I think in the years ahead, as those pipelines may come online, there's more capacity, more interconnectedness is good. But for now, some of that rigidity continues with prices being all over the map because of pipeline bottlenecks.